taking a look at the first slide, the key calculation here, and we talked about this before, is where you end up defining a field called total vendor amount, and that is equivalent to the distribution amount, and then you summarize on that total vendor amount. And that total vendor amount, what's nice about that is then that can be used as a calculation field so that you could divide the distribution amount divided by the total amount for that particular vendor. So we'll walk this through. I think it'll make a lot more sense when you see it in the script itself. But that's the key calculation, is you're calculating a total vendor amount and then kind of aligning that vendor amount back for further analysis purposes. And once in ACL here, we have this less than 20% script open, but let's take a look at the vendor distribution file. I have the vendor number, the account description, and this distribution amount. So what we're kind of saying here is for each vendor, where did the information hit the general ledger? And what I'm most interested in is vendors that have situations where they've posted less than 20% of their value to a particular account. So again, myself, if I work for a company, I'm usually a vendor and I am a consultant. So 100% or maybe about 98% of my time would be coded as consulting. Then if there was any travel or some other expenses, I bought some books for the client or something like that, that might be coded separately and coded as like travel or books or whatever. And then that would be the 5%, differential. So it's 95% consulting, 5% other stuff. And what this script will do is actually figure out what is that other stuff, because when people consistently hit a general ledger account, that's not really that interesting. What's interesting is when you have people hitting other accounts. So keep this in mind that you could use vendor number in this case. If you had an enterer, a lot of times what I find, let's just go back to this data point, we have the enterer field here. What I find is that people who enter journal entries tend to hit the same general ledger account over and over again. So, the enterer field would be a great way to kind of identify that. But in the vendor distribution sample, we have vendor number and account number, so we're going to work off of those fields. And let's just walk through the logic of that script. Again, it's going to open up the vendor distribution sample table. Vendor number, oops, don't do that. Vendor number, account number, distribution amount are the three fields it's going to use. It's going to first summarize on the vendor number and the general ledger account number, totaling how much is being posted by vendor to each distribution amount table. So that's kind of first one. Then it's going to summarize on vendor number the entire distribution amount. So it's kind of saying, well, how much did that vendor post to each general ledger account, and how much did that vendor post in total? And then it's going to kind of take that total vendor amount, so it's just taking the summarized version of the distribution amount here to a file called sum1. It opens it up, and then it's just redefining or actually calculating a new field that's equal to the sum total of that distribution amount. It's going to take the sum file, the sum1 file, put them together, join those together on the vendor ID number, and it's then going to kind of bring those together to a new file, sum2. And when it does, it's going to bring over that total amount field for analysis purposes. Okay, so once it's done that, I can then calculate a percentage of the distribution. And we did this before with that total one field, if you remember. I can take the distribution value, which is now a summarized distribution value, and I can then divide that by the total amount. And I do this if the distribution value is not equal to 0 and the total vendor amount obviously does not equal 0. And if not, I enter that 0, 0, 0. So again, we have computed, carriage return, another carriage return, and that's where I have my condition. And if that condition is not met, it then puts in the 0.000. And from that point forward, this is going to create a file, mind you, called sum2, which is kind of useful. We're going to then extract that data to I guess a file called sum3 if the percentage of distribution is less than 20%. And then it's going to kind of join that back to the original table. Let me kind of stop this script. Again, I'm just going to use my good old break function here, which ACL does not recognize, so it breaks it. So let me just run this just to show you what we're doing up to this point. So what we have here is we have the vendor amount and account number, and it was the original, I believe, the original sum file, which is vendor and account number summarized with the distribution amount as the amount that's accumulated. The sum1 file had the total vendor amount, and then that's aligned back to the vendor and account number. And if you notice, there's a lot here where it's like the percentage of distribution is 100%. But as you kind of scroll through this, you notice there's a few in here where, okay, this vendor 1405930, account number 53115, it posted 4% of the data. Account number 58405, it posted 97% or 96% of the data. So it's interesting. I mean, it's something to quickly take a look at and be able to look at now that 3%. So what the script will then do is extract out the less than 20%. So that 3% would show up in there. And then it will join back to the original file to say, for that vendor, I kind of want to see all their activity now and look at all the details of anybody under 20%. And that's going to be this thing called unlikely strat trend details. So hopefully I can, hold on one second. So we have that, if I can find them here again, or I could take a different one here. This one's less than 20%. So we have vendor number 1414400. And if I go into this unlikely strat trend, I guess I can, just say if the supplier equals that's interesting. So something, oh, I apologize. I'm actually in the stratification report, which was run. This is the right report, the vendor invoice distribution less than 20. And what we want to do is say if the vendor number equals that 14144, and notice here that is extracted. That item that was kind of in that 17% category gets extracted to this file. So now the vendor invoice distribution less than 20, it's kind of interesting. I mean, we went from a file of about 8,000 and we came down to a file of about 900 records that you can take a look at. And I would even say if you change the 20% to like 5%, that would even be a lot less. I mean, you would obviously have much less to take a look at. So, all right. So again, that was kind of following through that script. But let's take a look here again, just at this less than 20% GL script, so that you can get a good feel for it. For the most part, again, we're summarizing on the vendor and GL account number, summarizing on that vendor number, joining it together. I'm going to get rid of that break there. It's extracting if the percentage of distribution, like the 17%, is less than 20. And then it's joining that back on the original file based on the vendor and account number. And then it's just extracting that to a new file called vendor invoice distribution less 20. So we'll just run that one through just to kind of prove it runs through for all of us. And that vendor invoice distribution less 20, if you notice here off to the right, you actually have the percentage of distribution, which if I go down to that 17, well, you could even sort this, right, and kind of work then. If you didn't like 15% and you wanted to start looking at stuff that's 5%, you can then just look at stuff that's 5% and less. So that would be about 700 records versus the 950 records. Okay, so again, that is this less than 20% GL distribution, and that will come with a script so that you can run it yourself and play with it. So that's good.